Folks, welcome back to the Contrarian Trader. This is Robert Desmond. It is Sunday, February the 21st, 2010. Folks, once again, our friends, you're looking at their chart, Goldman Sachs, they're in the news again. As you know, the European Union, the Euro in particular, has been absolutely hammered these past several weeks due to the damage that Greece has done to the EU's profile. Now, what did Goldman Sachs do? Well, Goldman Sachs, back in the early part of the decade, the 2000s, they helped basically mask Greece's actual deficit so that they could be eligible for entry into the European Union. After that deal, Goldman Sachs managed more than $15 billion worth of bond issuances for Greece. Now, I'm sure the people over Goldman Sachs, they had no idea that they were actually helping to do something that was less than above board. God forbid that they ever did anything that was inappropriate. But once again, our friends over at Goldman Sachs, they're still at it. The news of what they do comes out perhaps a decade afterwards, but it does come out eventually. So let's just keep this in mind, that these folks are still in business, still carrying on the same games, and Lord knows what they're up to now. So let's take a look at the euro. Look at the damage that's been done over there. Folks, if you're looking for that villa in Tuscany, if you made money in the markets over these past several months, buy it now. As a matter of fact, hold off. I'll be going into this a bit further with my subscribers tonight on what I learned over in San Francisco while I was out at the seminar there. But it has to deal with the actual quality of the euro, the value of the euro, and that's what I'll be sharing with subscribers this evening. And it also justifies why I believe that this market is not done with this current correction. So let's take a look at last week's action. There are a number of economic reports that are set to be released this coming week, and the top two on my list are consumer confidence reports as well as initial jobless claims. So we'll look to see how the markets react. And this is a weekly chart of the S&P 500. You can see that we're running right into that declining downtrend line, which is the major trend. This market, although we've had this massive rally from the lows of March, is still in a major downtrend. We have done nothing at this point to give any indication that we're done. This market has gone straight up on pure short covering and speculative rallies. The small investor has only begun to get in at these levels, which pretty much tells you that the market's pretty much topped out. But we need to remain aware that we did see some support here at the 105 level. We changed our uptrend lines on a shorter term basis to reflect that support level, and we'll see whether or not we can hold. Now, what gives me some concern over about whether or not we're going to be able to hold, amongst other things, is the fact that, take a look at volume. Volume dropped off dramatically last week. So take a look. You had a nice reversal at this 105 level. It took off last week for a rally of almost 3%, but take a look at the volume. There are no buyers out there. This is not institutional buying here. Institutional buying was back here. This is back in March. It slowly declined. You had the small guys coming back here and the small investor, and sure enough, you had the sellers coming from the institutions with the volume bars, purely indicative of new sellers, and those are institutional sellers. So do I think that this market's done selling off? No, I don't. Do we need to be concerned about a possible breakout above the 115 level? Absolutely. There are reasons to be positive on the economy right now, and I haven't seen them in the past several months. You have workers being called back to work at Caterpillar. So those types of things we need to keep an eye on. We are short the market, but we have to always evaluate our positions and decide whether or not it's the smart thing to do to remain short. But we also have to keep in mind the macroeconomic picture. Will the dollar continue to rally? That's not going to be good for manufacturing. If that happens, our goods become more expensive overseas. Will we see the Baltic Dry Sea Index? Let's take a look at the Baltic Dry Sea Index. Will we see that resume its downtrend? Well, it's selling that we saw last over the past several weeks. Last week was the first week in several that we did not see a sequential weekly low. Here we go. This is the Baltic Dry Sea Index. I mentioned this to my subscribers as we went short of U.S. steel several weeks ago, and we made a nice profit on that trade. So let's be cautious and not get too bullish or too bearish until we have a confirmation. Yeah, this is a nice rally in the Baltic Dry Sea Index, but again, this is going to be short covering coming in here. Okay, you had a major sell-off. We broke below that uptrend line. All right, so if we see that selling resume, you're going to see the commodities begin to deteriorate. If you see a continued rally in the U.S. dollar, you're going to see commodities deteriorate. So be careful with these trades. And take a look at the U.S. dollar. Nice rally last week. We thought we're long the dollar from back here. This is where you're supposed to have bought it. With the contrarian trader, this is where you buy your stocks. Back here when nobody wants them. Okay? Now we're up here. Nice profit. I had a lot of concerns coming about folks that wanted to take profits on this trade. I said, you know what? Hold off. The euro on a macroeconomic basis is very, very weak. So we want to take advantage of the weakness and take advantage of the U.S. dollar's flight to safety. And that's what we're seeing here. So we're still low in the U.S. dollar. I do predict that we're going to see this uptrend continue. If this 50-day moving average crosses above the 200-day moving average, I'll get all the more bullish. So, folks, I'll be going more into detail on what I see for the coming weeks with my subscribers tonight on Contrarian Commentary. I'll post it on the members area of the website. Please take advantage of the 14-day free trial offer. Join the Contrarian Trader. Don't be like the lemmings that came in and bought the market back here. Okay, you had folks that were overzealous and they started buying back here, the small investor. We knew that's the time to get out. All right, we went net short back there. I'm not all that bullish, although we saw rising volume on a daily basis last week. On a weekly basis, it declined. So you need to look at the big picture, and it's just barely trying to stay above its 50-day moving average. You could possibly see a retest of this 104 level. That might be a time for us to send out to our subscribers, listen, time to get long this market. Let's cover some of these shorts, take profits, and let's get long. It all depends upon whether or not we see a nice W formation form here. So we're not getting long stocks right now, but we do have a plan, and I'll be bringing it up to subscribers tonight. Folks, again, please take advantage of a 14-day free trial offer. If nothing else, please subscribe to my channel, and look forward to hearing from you. And do me a favor, please shoot me an email if you have any questions. Robert@thecontrariantrader.com, and I'll be more than happy to help you out. Thank you. Have a great trading week. Bye-bye.